Okay. Ready to go?
Ready. We should be on.
Okay. All right, great. Thank you very much. Really excited to have everybody here. This is Arian Lewis. I'm the CEO of Kiln. We have a couple hundred callers and people who are joining this meeting today. We're really grateful to have some experts from around the state here to help us talk through SBA loans and what it can mean for your business, specifically small businesses. Many of our companies at Kiln are early stage tech companies. And so we're going to be focused later in the conversation. We're going to talk with Dave from ProvenCFO and Jon Cheney from Seek. We have Miles, who's joining us from the World Trade Center here in Utah. And we also have Marla and Jon, who are joining us from the SBA. Marla is the district director of the SBA, and Jon is on the district council. And if I didn't mention this already, Jon Cheney is the founder and CEO of Seek, and Dave is also the founder partner of ProvenCFO. Miles is the president and CEO of the World Trade Center. So let's go ahead and get started with Miles. Miles, if you'd like to give us a little update on the work that you've been doing with the governor. And I know you mentioned that right off the bat, you have some helpful resources to point some of our companies on the call to. So if you could go ahead and share that with us, we'd appreciate it.
Yep, absolutely, Arian. And thank you to you and your team for pulling this webinar together. We all know that small businesses across the state are under tremendous pressure right now. And so we're grateful for you to convene this group and for the experts that are on today to help our companies understand where they can turn to get resources to help them as we all deal with the effects of COVID-19. So very briefly, a little bit of context that could be helpful for everybody listening in today. Most people have heard of this task force that the governor has organized to help us deal with the economic challenges we're all facing. The purpose of the task force is just as our health professionals are working to flatten the curve of growth of COVID-19 here in Utah, the economic task force is working hard to flatten the economic dip that we all are experiencing. And so part of the task force is focused on maximizing to the greatest extent possible the number of Utah businesses and individuals that are able to benefit from the many federal programs and resources that exist. Those were significant a few days ago, but for anybody watching the news and has looked into the stimulus package that's being debated in the House right now, will likely pass the House and be signed here very shortly, knows that this is a big deal. $2+ trillion stimulus, the biggest bill that's ever gone through Congress. And it's interesting, just a little bit of context on the purpose of the stimulus package. If you look at the numbers, it's roughly equivalent to 10% of US GDP last year. And speaking with Senator Romney and Senator Lee and others have been involved in this effort, the idea behind this package is across the country, we're seeing many aspects of our economy being put on pause. This package is designed to fill the gap between where we are now and where we're going to be when we can start reopening things back up and we get back into a recovery phase. The more companies are able to keep the lights on, keep making payroll, keep paying their rents, the easier it's going to be for us to bounce back as we get through the far side of this pandemic. And so the stimulus package is built around 5 different pillars. There's a health pillar, a small business pillar that we're going to hear about today, a pillar for workers and families. Those are the direct payments people have heard about in the news, as well as significant increases to unemployment benefits. There are many tax changes as well on a 4th pillar. Then the 5th pillar is to support both distressed industries like the airlines and hotel industries, as well as state and local governments. So for the state, we are likely to receive about $1.5 billion of additional resources here in Utah that the governor and his team will have an opportunity to shape how they're used here. But of course, for today's topic, the key focus is the Small Business Loan and Grant Program. It's fantastic that Marla and Jon from the SBA are joining us. They are the ones who are the point of the spear here in Utah. They have been doing everything that they can to support as many businesses And so I really encourage everyone to listen to what they have to say, because they are going to be tremendous resources for all of us here in the state over the next few weeks. Very quickly, where to go to find more information about this. You can go to coronavirus.utah.gov/business. We have a team right now from several different federal departments and agencies, as well as our congressional delegation, working on putting together a key overview of all the federal programs and resources that exist. By the end of today, it'll be up there on the website. And then Marla is going to talk a little bit more about other places you can go to engage in these small business loans and grants that we're going to hear about today. So again, thank you to everyone for joining. Arian, thanks for organizing this, and really look forward to hearing what Marla and John have to say.
Well, thank you, Miles, and appreciate the work that you're doing behind the scenes to help shape the narrative for the governor in terms of what small businesses need. Marla and John, we're really grateful to have you on the call. I'm sure that your schedules are very, very tight right now. So if you wouldn't mind giving an introduction, helping the community understand just a little bit more about who you are and what you do, and then we can go into some great questions on the SBA loans and the processes that are being rolled out right now.
Thank you.
Uh-oh, I think we're having a hard time hearing you.
Okay, can you hear me now?
No, no.
Okay, can you hear me now?
You're getting closer, getting closer.
Sorry, I'm talking as loud as I can.
Are you close to the mic?
Yeah, I am.
Okay,
Hold
we
on
can hear you now.
Okay, great. So thank you to the World Trade Center, and thanks to Kiln for hosting this webinar. We really appreciate it. And good morning to everyone. As Miles said, I'm the SBA District Director here for all of Utah. And I have with me John Gygi, who serves on my staff as a district counsel and can help answer some of the questions during this webinar. So what I want to do is just kind of walk through the legislation under the CARES Act and what that means for small businesses here in Utah. This CARES Act is going to provide relief for small businesses and their employees who are adversely affected by the COVID-19. Under this legislation, there will be a paycheck protection program, which will provide small business loans on favorable terms to borrowers affected by the current state of economic injury. And I need to caveat this by saying until this becomes law, things could change. So once it does become law, we will have more information in terms of what it means for small businesses, lenders, the economy, and how SBA is going to fulfill our responsibilities in terms of implementing it.
Just so you know, Marla, you're kind of coming in and out just a little bit.
Okay, sorry, I'm sitting right next to it, as close as I can get. Is that a little better?
That's a little better, yes.
Okay. So under this legislation is a 7A loan program enhancement. And the legislation would provide $349 billion to business loans made by lenders under SBA. These loans would be 100% guaranteed by SBA, and all payments on principal, interest, and fees for SBA issued loans undertaken prior to enactment of this bill will be covered by SBA for 6 months.
Okay, sorry.
Go ahead.
Let's pause just for a moment. What does that mean? You're saying that anybody who's already received a loan is benefited, or you're saying?
Correct. That's correct.
Okay.
Yep. So those that already have an SBA loan will benefit from that. The covered period for these loans under the legislation is February 15th, 2020 through June 30th, 2020. And the use of the loan proceeds would be to use for paying payroll costs and healthcare benefits, employee salaries and commissions, mortgage interest payments, rent, utilities, and interest paid on pre-existing debt. Eligible entities would include small businesses, private and public nonprofits, veterans organizations, tribal business concerns, sole proprietors, independent contractors, self-employed individuals. And we're going to use our standard of generally 500 employees or less, and it will be operational on February 15th. For those businesses that were operational as of February 15th, 2020. It does include restaurants and hotels as well. Businesses with multiple locations of 500 employees or less, that would be per location. And they need to have a NAICS code starting with 72. So that would include accommodations and food services such as hotels, restaurants, etc.
Marla, I had a question on the criteria for those. When you have typical SBA loans, there's a requirement with anyone that has 20% or more ownership of the entity needs to be part of that underwriting. Does that still apply for these type of for any type of these programs?
Actually, that requirement will be waived under this new legislation. So no personal guarantees or collateral would be required on this loan.
Is that on both the bridge loan?
Dave, sorry, Dave.
Go ahead.
So just because it's a little hard to hear, John, I'm going to just repeat what you said, John, because it's so important. You're saying that no collateral is required on the loan. Is that correct?
Yes, that's correct.
So there's no collateral required and no personal guarantees. Is that what you said?
Correct. So under this legislation, it waives the guarantee fee and annual lender fee. It waives the credit elsewhere requirement. It waives collateral and personal guarantee requirements, and it waives prepayment fees.
Okay, and the prepayment fee. Still really hard to hear you guys. We've got 620 people watching now. So we want to, anything you can do on your microphone. You can, by the way, you should be able to change your microphone through your portal there. But let me just make sure that everybody knows. I think, John, you were referencing a bill, and as I understand, the House just passed it in the last just a little bit here. Congress just passed the bill.
Yep.
So this is very different than a normal SBA loan, because normally an SBA loan, it requires some sort of collateral or guarantee, but you're saying these SBA loans will not require any collateral or guarantee, correct?
Yeah, that's correct. And so let me kind of walk through a little bit more of this, because this might help you guys understand it.
Good.
The terms of the loan would be up to $10 million for a small business. It would also include funding for 2.5 months, up to 4% interest rate for the out years.
Sorry, the last thing you said didn't come through super clearly. Can you just say that very last thing? So you said up to 10 million, and we've heard 2 million, by the way. So the 10 million is new news, I think.
Yeah, that's correct. So the 7A under this legislation would go up to 10 million for those businesses that are affected under this crisis situation. And the maturity for it would be up to 10 years. So pretty substantial. The interest rate wouldn't be any greater than 4%. And the payment deferment for the first 6 to 12 months is also in place. So again, it's going to be really beneficial for those small businesses. Now, this is important to note, because I know that some of our small businesses here in Utah have already applied for the economic injury disaster loans through SBA. What I want to point out here is that you will not be able to have the economic injury disaster loan and the 7A emergency loan and use it for the same purpose. But you can refinance the economic injury disaster loan made after January 30th, 2020 into this 7A emergency loan. So that's important to note. So there will be a sort of a rollover, so to speak, for those folks that have the disaster loan. I think I already walked through the waivers. Again, the guarantee amount is 100% through December 31st, 2020, at which point the guarantee percentage will revert back. Now that the loan forgiveness.
Marla, for those on the call that aren't familiar with standard lending, can you just explain in sort of very layman terms what it means when you say the guarantee will expire in 2020 and December 2020?
So what that means is any loans made up until that time will carry a 100% guarantee from the administration. Any loans approved after that date will revert back to the original guarantee percentages that were in effect.
Got it. Okay, so any loans issued between now and December, these special rules apply to. That's what you're saying.
Yes. Well, not necessarily. All the specials, there's different covered periods for each section of this act. So it depends upon what you're talking about. So if you're talking about the forgiveness portion that we'll talk about, it's only for loans made up through June 30th, for example. But the guarantee part of it is up through December.
Okay. All right. So keep going with what you were saying, Marla, and then there's going to be a lot of good questions.
Yeah, sure. So I just want to.
Oh, we can't hear you.
I want to hear me now.
Oh,
Can you hear me?
no.
Oh, you know what? You're gonna have to turn off this.
I think John, you're on as well. Is that right? I see a second line that's chimed in.
Yeah, we're trying to dial in on the phone so that it might be a little easier to hear us.
Yeah.
Hold on one sec. Sorry.
Okay, we're going to give you, yeah, that was clear. That was more clear.
Okay. Can you hear me now? Can I walk through the loan forgiveness?
No,
All
great.
right.
Yeah, you got a second one in.
You're muted, Arian.
Just go ahead and try that one that you just called in on. There you go. All right, let's give them a moment to work on the tech there. Just let us know, Marla, when you chime back in and can hear us. John and Dave, you've just both recently gone through this. Can you comment at all on what Marla was explaining? And because I know both of you have done some in-depth research on this as well. John, let's start with you. Any comments on what Marla and John from the SBA were just explaining?
Well, Marla just brought something to my attention that I wasn't aware of. I did very early in the process, as soon as I heard it was available and that it was going to be very favorable terms, I said, hey, I need to make sure that my employees stay employed, right, as long as possible without any interruption. And so I dove in, but I did apply for the economic disaster loan, right, which it sounds like is going to be different than the one that's going to hopefully be approved in Congress today. But it sounds like Marla said that's going to be a relatively easy rollover.
Great.
And Arian, I can jump in and provide a little bit of clarity there. So you're exactly right. So there's the emergency disaster loans that people have been applying for. With the stimulus package, there will now be these paycheck protection loans that Marla was describing. And there are some trade-offs. And for people watching, just because now you have the paycheck protection loan, it doesn't mean you necessarily want to go that route and not the emergency disaster loans. The perk with the emergency disaster loans, and they're being expanded with the stimulus, is that as soon as you apply, you get an advance of $10,000. Even if you ultimately are not approved for the loan, you still get to keep the $10,000. And so for companies that have, it's really significant. So for a company that has really, really tight cash flow right now, and there's a lot of companies out there, that $10,000 advance right up front is a big deal. And so still take a look at the emergency disaster loans. They are being expanded. With
So
the
let me just repeat that because my head's kind of going.
Right.
going like, wow. Oh, so Marla, can you hear us now? Nope. Not yet. You're showing
Yeah,
mute. There we go.
okay, can you hear now?
Yeah, can you just kind of verify? So you're saying that if a company applies for the emergency disaster or economic, what's the term of the loan?
The emergency disaster loan is
The emergency disaster loan. So if a company applies for the emergency disaster loan, there's an immediate issuance of $10,000. Is that correct?
Yeah, let me be clear. Okay.
We can't hear you super well. Sorry,
Can you hear
Marla.
me now?
Yes, closer. Yes.
Okay, all right. So under this legislation, it includes 10 billion set aside for a grant. And that is an emergency grant that Miles was just referring to, where a small business owner can get $10,000 within 3 days of their application. Okay, so this can be combined as part of the economic injury disaster loan. And if in fact they get approved for the economic injury disaster loan, then that 10,000 would be subtracted out. But again, that would hold them over while they're waiting to get the funding for the disaster loan.
I did not hear anything about that. I applied probably 8 days ago. I think I applied last Thursday and have not been notified. I haven't heard anything. That was one of my questions. How do I find out about the status of anything?
Yeah, so again, we have to implement this through the legislation. So it's not available right now, but it will be soon, hopefully. The status of your applications is not something that we can go in and look up. It's done through the Office of Disaster Assistance. And so I do have some folks on staff that can help walk small business owners through that application process. However, we can't get in there to check your status.
Yeah.
There is a way for you to go in and check the status if it's under review or whatever.
The website has been down for the last 24 hours, and then they updated it with just a space for us to drop documents in or to email directly to that disaster. So the status checking has been overwhelmed by applications, I think.
Yeah, no, you're right about that.
I had a question, Marla. So it sounds like with the stimulus package that just barely passed, the 7A loan would be able to be used for this economic stimulus package for disaster recovery. Typically in the past, we see all 7A loans going through banks. Is still going to be the case where instead of applying directly with the SBA like we're doing for the economic disaster loan, will we be applying through the banks?
Yeah, that's correct.
And tell me about do you have any idea about some of the guideline changes, the underwriting guideline changes that we would see on those 7A loans? Are we still going to see some of the same criteria that we get with the regular 7A?
No, as we mentioned earlier, for example, they're waiving like the credit elsewhere requirement.
Okay.
And the collateral requirements, the repayment ability, I'm not sure about. I'm sure they're analyzing that still, but a lot of the guidelines have been changed.
Do you have any ideas of where we can read through any of that? I mean, the stimulus package has been going through so many iterations. Is there any space that we can find information on that? We're trying to keep our ear to the ground for hundreds of companies about these underwriting changes, because there is a lot typically with the 7A loan. So we want to figure where we can find those things. Do you have any?
Yeah, I mean, I've seen 3 different iterations of the bill itself that I've gone through this week. I did get the final language yesterday, so I've been going through that and trying to synthesize. But we're trying to do our we're going to really wait for what comes out of headquarters.
Okay.
So they're going to put some stuff together, and then we'll be able to pass on that information so it's more available for the businesses so that they really know what this act says.
And do you think we'll have these things coming through the banks eventually, or should we just keep our ears to the ground directly with the SBA disaster sites?
Well, the SBA disaster loans, which of course are direct loans from SBA, that they won't pass any information probably on through that
Okay.
mechanism for the new 7A loan enhancements. So that will come more from, you know, the lending side.
Okay.
Well, yeah.
So can I pause just a moment, because as a non-expert on this, I'm probably similar to a lot of our listeners today on YouTube. We've got right now over 630 listeners, and tons of comments going back and forth on YouTube. Let's just quickly triage just a few important points. Number one, John and Marla, if somebody wants to apply for the loan, do they go to the SBA website right now? Is that the best avenue?
Which loan are you talking about? The disaster or the enhanced 7A?
Okay, you tell us. Which one should we be focused on, and where should we go?
Yeah, so the only one that's available right now is the Economic Injury Disaster Loan, and that's through our Office of Disaster Assistance. So folks can go online, sba.gov/disaster. And I understand they're having issues with the website, but if small business owners have any challenges, they can get a hold of us through our Utah General at SBA email box, and we can help them walk through the process, because they can also fill it out and submit it via FedEx.
This morning I heard that they have changed the system a little bit. So what you do is you download the PDF fillables, fill them up, then you upload them to that Dropbox thing that you mentioned earlier. That's how they're doing it. You can't go right into the application and fill it out. So you can do it that way, upload the documents through the Dropbox, or like Marla said, FedEx them overnight. Now,
okay, I want to repeat one thing to make sure that it's captured. If somebody has a question and wants to reach out to you, you said UTA General or Utah?
Utah General at SBA.gov.
And it's Utah spelled UTAH or just UT?
UTAH General at SBA.gov. It's in the inbox where we're receiving emails. And then let me give you the phone number too. It's 805-224-3209.
3209.
Correct.
Okay, great. That's very helpful. Okay, so if I'm a small business wanting to quickly get engaged, I can, number one, go to the sba.gov/disaster or /disaster website and apply. That's what you're saying, correct?
Yeah, for those loans that are available right now. And that's the economic injury disaster loans.
Great. And then let's talk about the next set of loans that are coming out. Help us understand what that next process is going to look like. And these are the next ones that come out go to 10 million. The current ones go to 2 million. Is that correct?
That is correct.
Yeah.
So these new ones that have come out are essentially just like our existing 7A loans. They will be made by private lenders, banks, credit unions. So the small business would go to their lender and ask them to help them get an SBA guaranteed loan under this new program. And so the application process would be done through that lender.
And when do you think that will actually happen? Like when, if I'm a company listening to this call, when should I call my lender and start talking about this?
I think I would start talking to them now. We don't know for sure how long it's going to take to get this ramped up and going and to get all the full guidance we need. But I would be touching base with my existing lender, or we also have a list of all the SBA participant lenders in the state, which will be expanding because under this new legislation, Secretary of Treasury will be able to authorize other lenders to participate in the program too. But I would look up these lenders, get in front of them, start getting my documentation together, tax returns, financials, that kind of stuff.
Okay, great.
So
we have-
I had a question about back to the question about venture backed and the personal guarantee issue. With some of the companies that have 20+% owned by someone that's doesn't typically qualify for SBA, which are probably a lot of the kiln clients who are series funded. You had mentioned that there's been a change. Had you seen anything where it's just dropping that requirement off?
Dropping the requirement for guarantees on all loans?
No, so if somebody owns 20% or more and they're typically too big, meaning they own their net worth is more than $15 million, right?
Yeah, let's say it's a venture. Let's say you're a venture backed. You're a venture backed tech company, and you know that your venture company owns more than 20% of your business, and they obviously have a net worth that's quite high. How does that impact a small business in that scenario, in that situation?
So I think what you're getting at is, will they still qualify as a small business and meet the size standards, right?
Yes.
Which is a question that's arisen lately, I know, with the venture capitalists, because we look at affiliates to determine
Correct.
whether they meet the size. Affiliates are included. And affiliation is all about control. So just because somebody owns 40% of a company doesn't mean they control it if somebody else owns 60%. And you also have to look at the management. So I know some of these VCs take board positions, whatever. We would have to look at the bylaws and see how those boards operate, who has the voting power. Is there any kind of negative control being asserted? So it's all about control with the affiliation to determine if those will be included in the size determination.
Okay, so it's control, not equity or ownership?
Right, it's control, which can be looked at through stock ownership, management, common investments, and reliance on each other. There's a few prongs to that control inquiry.
Yes. So if you're a venture-backed company right now, now's a good time to take back some control from your VC.
And is the requirement still the same then for 20% ownership or more related to that control? For example, I have a client that's a wholly owned subsidiary of another entity that's much bigger, but they're still, in my opinion, a small business because their compensation is tied directly to the health of that entity. So is SBA doing, is the new underwriting guidelines for 7A going to shift that, or are we still looking at that control the same way as before?
I believe we're going to look at the control as the same way as before. But there are some relaxation on affiliation, for example, in the hotel and restaurant industries, the franchises under this new program, franchise affiliation will be lightened up, but just in those specific areas.
Okay, great. Let's go back now. Marla, you were trying to I think our sound has improved. What else can you share with us? Your comments and answers have been so helpful so far. What else can you share with us about the next phase of loans that are coming that can be up to $10 million? What can you tell us about the requirements, again, for those loans? And you don't know about the timeline right now, it sounds like, but anything else you can tell us would be helpful.
Yeah, thanks. One of the things I wanted to touch on is the loan forgiveness. I think this is
Kiss that microphone just as heavily as you can.
Wow. Okay. How about now? Now?
Yeah. No social distancing.
Okay. I wanted to touch on the loan forgiveness of these 7A loans. It'll be covering a period of 8 weeks from the date of the loan. So any money spent within the 8 weeks of receiving the loan is forgiven. The forgiveness will equal an amount spent by the borrower during the covered period on payroll costs, mortgage interest, rent, utilities, that kind of thing. So here's another caveat to that. If the business reduces its number of employees, then the SBA reduces the amount of forgiveness by the same percentage. Okay, so that's important to keep in mind. And likewise, if a business reduces the salary it pays to an employee earning less than 100,000 by more than 25%, the SBA reduces the amount of forgiveness on a dollar for dollar basis. Employers that restore their employment numbers and salaries by June 30th, 2020 would experience no reduction in forgiveness. So again, that's important to keep in mind. And borrowers can apply for forgiveness and must supply certain documentation, as you were asking about. So that would include like payroll tax filings, state filings, verification of mortgage and utility payments, certificate from representatives, and that kind of thing.
So
And then
Marla, sorry,
go ahead.
just the concept of forgiveness outside of our chapels, help us understand what you're referring to when you say forgiveness, for those that are not familiar with that.
Basically, what we're looking for is the business to maintain their staffing and compensation levels for those couple of months. And if they do that, then that part of the loan does not need to be repaid back. It's canceled. So then they only have to repay whatever other borrowings they had. So it basically becomes a grant. Huh?
It's a grant.
Yes.
It's a grant. In my language, it's free stuff, but I won't put it that way.
Yeah, there you go.
Okay, that's significant, and it's all about just keeping people employed. And so if you're a big company right now, or a company of less than 500, I should say, and you're laying people off left and right, I hope you're listening, because I hope that before you go down the path of ripping employment out of from under too many people, that you're really seriously looking at the options that you have here, so you can keep people employed.
And Marla and John, how do we know how much we are able to borrow?
Okay, basically, there's a formula for that too. So they want to be able to give you basically what amounts to 2.5 months worth of payroll costs and payroll support. Also, you'll also be able to include any upcoming, interest on mortgage obligations, rent, utilities, that kind of a thing. So you'll add all that together to get your loan amount, which cannot exceed 10 million.
But a lot of our companies are founded by the actual team that's there operating them. I would assume this accounts for everybody in the company, whether you're the founder or whether you're an employee. Some of our companies are only 8-person companies. We have questions coming in on that on the YouTube chat. Can you just answer that?
The way I read it is that it's all full-time, part-time, and other employees that are included in the calculations.
So if you receive a W-2 from your company, even if you were the founder of the company, then that would qualify for anybody that receives a W-2.
Yes.
Okay.
What about contractors? Do they count towards the employee count?
Great question.
I believe so. And we can also make these loans to sole proprietorships and independent consultants and contractors.
Fantastic. Okay, so let's go back on both of these loan types. You're saying there's no requirement for a personal guarantee or collateral on both loan types. Is that correct?
No, that's only for the 7A enhanced loans. On the disaster loans, there'll still be guarantees. There will still be collateral required for any loan $25,000 and above.
Got it. Okay, that's really good. That's really good to know.
But be aware that the disaster loans will not be declined just because of lack of collateral. You just have to pledge all your available collateral that you have.
Everything you own.
Well, yeah.
And not your children. Your children don't count as assets to the government.
I have a question on that then. Since I have applied for the disaster loan already, can I just rip that up and throw it in the garbage and wait for the enhanced 7A and start over?
Yes. So basically, you can. There's no cost to apply, as you know, but there's also no obligation.
Sorry, Marla, just come as close as you can and just start
Okay.
that section over. Thanks.
So again, there's, as you know, there's no cost to apply for these disaster loans. But in addition to that, there's no obligation to take it once it's offered. So you're absolutely correct. You could just rip it up and then go for the 7A.
I wouldn't withdraw it or anything. Let it go through the process, see what you get.
Right.
But then you don't have to take it.
Correct.
Sorry, can you say that again, John?
I said I wouldn't go to the, I would not go and withdraw my application. Let it go through the process, get a final decision, see what you've got, see what plays out on the 7A side in the next couple of weeks. Then you can decide whether to take the disaster loan or not.
Okay, let's talk about two other things. One more time on timeline. And the big question is when. Do you have any other detail on sort of when either of these types of loans companies could start to see approvals or some relief come through on them?
So headquarters is working on this right now. I think they intend to roll this out as quickly as possible. So we may see movement on this as early as next week, but we will have additional materials, I believe, to share with everyone on Monday. And so I would suggest that folks get signed up for our newsletter so that, because we're blasting out, advisories on a continuous basis. And that way they can keep up to date on what's going on.
Great. How do you sign up? Sorry, Marla, how do you sign up for the newsletter?
Yeah, if you just go out to our district office website, so it's sba.gov/Utah. That's UT. And then go to the bottom right page. There's a public Gov delivery link there that you can go in and sign up. But certainly if you have any issues or whatever, just email us at that utahgeneral@sba.gov email address.
So Marla, I had a question that came up in the chat here. Question was related to pre-revenue companies, right? So in our normal processes, when we're helping companies out with their balance sheets and figuring out how we're going to get them funded, whether we can go after debt or equity, typically we tell pre-revenue companies, well, you're out of luck. Is that still the case with these enhanced 7A loans or even with the EIDL program?
I know that, for example, on the disaster loans, you do have to be able to show repayability. I think they can base that off of reasonable projections.
Okay.
John, so sorry. Hard to hear what you just said.
I heard that, John. You said we potentially are going to be able to use projections for revenue. That's always a tough thing to predict revenue right in the middle of an economic shift because of COVID. But we're doing the best that we can. Do you know anything about those projections? Typically, we're looking at 2 years worth of monthly cash flow projections. Is it still the same?
Yeah, I think it's the same. And I should mention on the enhanced 7A loans, they are waiving the requirement of having been in business for a year in certain instances too. So they are looking to help new startups.
That's terrific. So it sounds like the government does care about startups.
Yeah, you can get it for a startup. That's right.
Yay for startups.
Awesome. Okay, so John, you've just gone through the process of applying. Can you just give everybody who's listening, again, 623 people at the moment, what is the process like? How long does it take? What questions did you come up with as you were going through it real quick? And John and Marla can hopefully help us address any concerns or questions about the application process. So just walk us through in a minute what you did, if you would. John?
Are you asking me?
Oh,
John-
sorry. I meant to ask Jon Cheney. Apologies.
Oh, yeah.
John's.
I'm
John
here.
Cheney.
So I think I'm unmuted. Yeah. So I applied again about a week ago, about 8 days ago, and the process was a little bit different than now. There were forums you could get on, and it was all digitized, and I just clicked next, and it kind of put everything together for me. I did have to upload my 2019 tax return for Seek. It did ask about a few personal questions on my end. I had to fill out a lot of information on my personal debts as somebody with over 20% ownership, which in my company's case, I happen to be the only one there, so that's good. We've managed to keep our investors under the 20, but the process has changed a little bit now. It looks like on the disaster loan, you have to print everything out and kind of do everything manually and then upload it. I'm sure their website got overloaded and they didn't have the processes in place to make it happen. But the whole process took me about an hour, maybe an hour and a half or so. I don't know if I was 100% locked in the whole time, but it wasn't too bad. Just a lot of questions and answers.
And so Marla and John from SBA, do you believe, so when do you think like John would actually hear back from this, that he applied through the SBA website, not through his bank? Obviously the next phase of loans will be through the banks, but when do you think John would hear back? Do you think it's a month, or do you think it's a couple?
So the processing time was supposed to be 10 to 15 days. Business days. So, and then it's shifted to 2 to 3 weeks. So it's kind of taken a bit of time. And again, a lot of folks now can't go online because the online system is crashed and whatnot. But hopefully they can, get these emergency grants in place. So at least it'll give businesses the $10,000 up front within 3 days to sustain them while they wait for the loan to go through.
Excellent. We've had a number of questions come through online about debt. With these loans, can you consolidate prior debt? What's the directive in terms of what can be done with existing debt that a business may have?
So on the disaster loan side, no, you cannot refinance debt. On the Enhanced 7A side, you can use it for any purposes that a regular 7A loan can be used for now, in addition to the payroll stuff that we mentioned before.
Okay, that's helpful. Okay, so other questions that may be arising, John and Dave. Dave works with several companies, as he's a CFO company, including Kiln. And any other questions that you feel are really important right now with regards to what other companies in different situations, startups, are dealing with as it relates to these loans?
Not as it relates to the loans. I know a lot of our clients that there's a fair amount of confusion just because of the volume of information that is happening, right? So what we've been trying to do for our clients is just on our website, we're keeping a running list of the resources available. And from this conversation, Kiln is always at the cutting edge. You guys are always at the sharp end of the knife, because this is brand new information that's coming out right in this call, which is terrific. We're going to take a lot of this and compile it so that our clients have access to that, because this information is so new and so confusing. It's really nice to hear that you've got these Enhanced 7A program that's coming out. We're just going to have to wait and see in terms of how quickly the SBA can really respond on getting this economic disaster loans back out to small businesses. So John, I beat you to the punchline by about 3 days. I applied to the EIDL just for ProvenCFO. I don't think we're going to need it ourselves, but we went through the application process to see. It was even before the website started getting real slow. Right now, what we've reverted to doing is taking the paper copies and filling them out for our clients and then submitting them. on behalf of our clients. So that's something to be aware of right now. I think that as you're going through this, you might want help. ProvenCFO, we're happy to help. And there's a whole bunch of other people that are moving into that space as quick as we can to try and make sure we're helping small businesses like yourselves.
Cool.
And I don't have a question, Arian, but I do want to just say one thing to anybody out there that is a small business owner that is considering whether or not to take these loans. Like Arian said earlier, this is free stuff. This is free money. I would make 0 employment changes. Don't fire anybody if you can afford it, right? If you're on your last dollars, then you might have to get creative. But if you have 2, 3, 4, 5, 6 months, a year, 18 months of runway, good for you. And hang on, this money will come and you will be able to at least let your employees last 2 months, right? Or maybe a little bit longer without any interruption to their daily life. And that's the point here, right? We want to stay as close to normal as possible in this very weird new normal for us. But if people need to get fired, wait 60 days, pay them this free money right now, then make the decisions that you need to do.
That's great. It's a great point. It's really difficult as a business owner right now. You're trying to understand what the future looks like. You're dealing with fires on multiple sides at the present. You're trying to be responsible in making sure that you can shore up your foundations for your team. It's complex, and I don't want to not acknowledge that difficulty, but absolutely, if we can, we've had just here in Lehigh and Salt Lake, we've had a number of layoffs recently, and I would hope that anybody who can delay that does. I know that it's affecting a lot of companies here at Kiln as well as out there in the ecosystem. There was a few questions that came up that had been covered previously. Let me just quickly one more time repeat that. The 7A loan may allow for some debt consolidation, but the disaster loan, the current loan that's available, does not. That was one question that was coming up. The other question that was coming up was how, if you apply and get the grant, the $10,000 grant, and then choose not to take the loan, what happens then? John and Marla, can you answer that question?
Repeat that again.
If you apply for, I believe it's the 7A that comes with the $10,000. Is it the 7A that comes with the $10,000 grant? No,
it's still it's a disaster emergency idle grant.
The
Sorry.
5. Yeah.
So if you apply for the emergency disaster loan and you take the grant, but you decide not to take the loan, what happens then?
And you don't take an idle loan?
Correct. If you just take the
it's a pure grant. You don't have to repay it.
Okay, so you do not have to repay it. So it's there to help you get through the next little bit as a company.
Yep.
Okay, that's very unique, pretty phenomenal. And yes, there's other questions about the interest rate. I think we've basically covered most questions. Are there any other questions, Miles, that you think companies out there would like to have quickly addressed by John and Marla before we end within the next few minutes here?
Aaron, the one thing that we haven't talked about that I think is helpful just to put on people's radar, and then we will, I think we're all going to be working to push out this information out through many channels, but the tax adjustments as well. So we've been talking about the loans, the different types of loans. And again, keep in mind the policy objective is to infuse cash to small businesses as quickly as possible. So even some of the things we've talked about today, I think as we dig into the law, we'll see that the expansion of the 7A program is even more generous, perhaps, than what we realize it is right now, because the policy is get cash to companies as quickly as possible. On the tax side, and these get more complex, but I just would flag for people any type of capital improvement since January 1st, 2018. So say you've got a business, you've renovated the inside of your building, you can write that off immediately. Is the full depreciation value as part of this bill. You can also defer payroll tax if you've been hit hard by this, which is defined as a decrease of revenue by 50%. But the interesting thing is you can get a credit as if you paid your payroll tax very quickly, but then you don't have to actually pay that payroll tax until 2021 and 2022. So again, get companies cash now, reduce what their expenses are, and then on this one, it's not just going to be straight credit. You do have to pay that payroll tax, but you can push it off for a year or two. And so there on the tax one, there's a lot of other tax elements as well. So really encourage people to look at the loans. You know, as Marla mentioned, right now, you know, we don't know, it will be 10 days or 12 days until it goes from House passes it, the president signs it, to full operating programs. So in that interim period, you know you're going to have to demonstrate your average monthly payroll cost for the past year. You know you're going to have to demonstrate your fixed costs, these other things. Get all that paperwork ready. So then as soon as the application's open, you've done everything you need to do. You just need to get in the application, you can submit it, and then get this cash infusion. And again,
Miles, are you
Yeah.
sorry? Are you saying that the payroll tax deferment is somehow part of the SBA loan process? Is that
no, it's part of the stimulus package.
okay? And so how do you go about deferring your payroll tax?
So that's a good question. I don't know the details on that, but I do know that as part of the stimulus package, in addition to these loans, they've made several adjustments to tax requirements for small businesses to make it incredibly favorable to keep businesses open, keep people on your payroll. And then I'm sure right now, as we go through this period from the law being passed to the regulations made, it'll more define what that process is. But it is a deferment on your
It sounds like we're going to need a little follow-up conversation on payroll tax
Yes.
and those programs that are coming out.
Yeah, absolutely.
I'm conscious of time. I really want to thank everybody that's joined this call. This is really important stuff. And John and Marla, we are cheering you on. You guys are heroes right now. What you're doing has a real meaningful impact on businesses here and in Utah, and on lives and on families and on people and their lives. So thank you for what you're doing. You're invaluable right now, and we're hoping and praying that you stay well and strong, and that we can support in any way possible. So please reach out to us if we can be of help or support to what you're doing.
Great, thank you so much.
Thank you. And Dave and John, thank you for joining. Miles, thank you for what you're doing with the government. I know that Dave, if somebody wants to reach out and ask you questions about going through the process, is there some way that they can contact you?
Yeah, just head over to our website, ProvenCFO.com. Hopefully it's spelled out nice and pretty on my t-shirt.
Great, nicely done.
But yeah, we've been helping clients out, and we've got for some strange reason, we've got capacity to grow in a time where most people are shrinking. So.
Okay, good. Well, any support is great. So to all of those that are listening in, thank you. We wish you the very best, and stay tuned, because we're going to have great new information coming out each week. And it's very likely that we'll come back and have a conversation about some of these incentives as we move forward into the future. So thank you. Good luck to everybody. Stay strong and stay connected.
Thank you.
Thanks, guys.